Hello, fellow investors. This is Ken Renner connecting with you here from Austin, Texas. And I just want to go over a couple things that you may not be aware of, which are going to help you in your starting of this new business. Every new property that you purchase is like starting a new business. And one of the things that we go through the whole process of maybe building a home or going through the whole contract process, and then at the very start of the business of rental property ownership, you end up with a vacancy, obviously, because it's brand new, and the first thing that happens when you close is we are searching, of course, ahead of time, searching for tenants for you, and then after closing, that's a major concern for everybody. The question I get asked probably most often by new investors is, how long is this house going to sit vacant? So just in the Austin, Texas area, Central Texas region, we're usually experiencing anywhere from 2 to 4 weeks of vacancy before getting a tenant. And so the average probably being about 21 days, about 3 weeks. So we understand that as a real big concern. It's one of my concerns. That's why what I do with my properties is I undercut the market so that I can get, I may be $25 or $50 underneath what the market rent is. And that allows me to be the loss leader of a neighborhood. And so number one, I get usually shorter vacancy times. And number two, I also usually get the pick of the litter of particular tenants. Now, in some of our neighborhoods, we're doing so well in those neighborhoods that we've created our own competition. So for one instance, with Windham Hill, we have 10 investors buying and closing over the next several months. And so we've, they're the great neighborhood, and but the problem is we're going to create our own competition with each other. So one of the things that's going to be an encouragement to you, and where to offset what I'm saying about lowering the rents below our performers and our market analysis, is that the way the property tax system works here in Texas, and this is to your advantage, especially if you're buying a new construction home. What it is that if you're buying one, the tax assessor assesses the value of the property every year based on its condition as of January 1st. And so a lot of our new construction that we're building that's going to be done or completed maybe summertime or even late summer, even May or whatever it may be, it was land value when the property was assessed on January 1st. So this is pretty exciting, because what happens is that if it was only land value, maybe you only assessed it maybe $25,000, $30,000, and even like a 2.5% tax rate, that's going to be, what is that? 3 times 2, 6, only going to be about a $600 tax bill, as opposed to what will eventually be about a $5,000 tax bill. So the first year, if you're buying something that's closing mid-year, you actually get a free ride on taxes. And so use that to your advantage, because that'll allow you to lower your rents below market, but also not hit your yields so much. So for instance, if you're closing in May or June, it was definitely land value at the time when the tax assessor came out and looked at it. Instead of having a $5,000 tax bill, you're going to have a maybe $600 or $700 tax bill. And so that the difference is about $4,000 or $5,000, between about $4,000 a year, which is about $400, $380 a month that you're going to save during that first tenure of ownership in the property. And so that should offset the fact that you want to have below market rents to keep your vacancy period down, and but also not affect your yields. Does it make sense? Because you're paying land value taxes as opposed to finished value. Where the tax system also works for those that are closing sooner in the year, like maybe a March or an April. A March or April closing time, the property was under construction, and so what you're going to have is a partial value of taxes. So let's say that you are, let's say the house was 50% complete on January 1st. Well, the tax assessor may only assess it $75,000 or $100,000, not the full $200,000 or $250,000 that it is once January of the next year comes around. So that's encouraging that you're going to be lower taxes, which allows you to have a lower payment. If you are impounding your taxes and they're impounding the taxes, escrowing them on completed value, you'll actually get a refund of your property tax overpayment. So keep that in mind, because that allows you to not have to worry about maximizing and squeezing every penny out of that first year's income, because you can always raise your rents. We're seeing usually somewhere between 2, 3, or maybe 4 to 5% rent increases. And of course, if we're on summer cycle, that helps a lot. So I really highly encourage you to just as you're getting this business going, these first properties, especially new construction in what we call construction zones, don't try to squeeze every penny out of that first year's rent, because your tax value will offset that. So the numbers work out pretty good for you, and I appreciate your business, and I appreciate any referrals that you have for me out here. It's been very exciting. We are the experts in this area for residential investment properties. So hope that's been helpful. You can reach me at 512-423-5626. Best way to get a hold of me is by text at that same number, and I will talk to you on the next video. Thanks. Talk to you soon.